Why does that happen every time? I unmute myself, then we start and it mutes me. I don't know why that happens. My apologies, guys. And once again, welcome to you, this time with sound. And happy hump day to you. I hope it's working for you. And we've got a fair bit to get through on a Wednesday, as always. We've got some interesting, some very interesting, should I put it that way, events coming today. Not least of which will be at 10 a.m. It's now, what time is it now? 7:55 in the morning. I'm talking GMT time, of course. With you guys, it is wherever you are. What on earth is going on here? I have no idea. Okay. You should have my... Yes, you do. Okay, I'm just checking on YouTube. Good morning, Paresh. Okay, we're good. We've got the BOC Monetary Policy Report. As you can see, I don't need to tell you that. Let me see exactly what time that is. That's what happened. I refreshed that and it all went nuts. And I still have an issue with Forex Factory for whatever reason. Anyway, at 10 a.m. GMT, Gary's absolutely, Angel, yes, please. That's all good. 10 a.m. So it's now what, coming up to 8 a.m., of course, which is opening of London session. That is 2 hours and about 3 minutes away from now. So that will be interesting for the CAD, and if you are in CAD trades, as I would like to be, but I'm not, it may well be worth a little bit of a run for you. It may be worth avoiding if you are not in CAD trades. And I will get to that very, very shortly. But of course, the Biden thing is, for most of us, that won't happen in daylight hours, certainly, and overnight it will be the case. I think it happens at 3 a.m. here in the morning. And of course, won't we all be riveted to the television screens? No, I don't think so. But, you know, the big thing is, of course, we hope it gets through without any incident. That's the big thing. And I'm very, very hopeful that that will be the case. I just want to refresh this to get the right timing. I think I've got something wrong here. The 2:57 a.m. I'm obviously on the wrong time frame. Let me fix that. That's not what I meant to do. What I meant to do was that. Please, no. Let me get out of here and come back to it, because we've got other things to do. I want to get the time right. There's something wrong with the time. I don't know what time I'm. Where's it? 2:58 a.m. I've got no idea. Anyway, let's move on and get the pound trade on, and we'll come back to that at a later date. You all know when that's happening, so no real need for me to go through it. Right, at pound trade, guys. Those of you who are joining us for the first time, we are trading a breakout trade here, and it is in beta test mode. I will add that caveat first up. So do not put any meaningful money on this. This is in trial mode only. What we're trying to do is trade a breakout of the last three candles prior to London Open. And in this case today, that's the low of the last three bars. That's the high of the last three bars. So we're going to enter just above that candle or just below that candle, one or the other. If one enters, we will cancel the other. Now I'm going to set these parameters first. So the entry at this point is going to be 1.3671 for the buy. So 1.3671 will be the entry. I may not have time to get this on, but that's okay. If we miss it, we miss it. Stop loss for that will be just underneath that bar, rounded down to 1.3653. 1.3653 is the stop loss. And I'll go through the take profits very, very shortly, but I'll put this in the market just in case. New order. You don't want to risk any meaningful money on this. As I said, it is in test mode. And pending order, buy stop. 1.3671. Probably won't let me place the trade. We're so close to the entry level. And the stop loss is 1.3653. Okay, it may let me place it. It won't let me place it. So that's fine. I don't have an issue with that. If we get the pullback, I'll be able to place that. And if we can't go long, I'm not that interested in going short either. But I will place the order because that wouldn't have been triggered at this point anyway. So let's place the order short. Short is going to be a sell stop at every day. They get it every day. They ring me at this time. Are they mad, stupid, or what? Okay, we've now missed the entry. So I'm going to null and void the trade completely. And I'll explain it to you. Those of you who are in for the first time, again, we're trading a breakout of the last 3 bars prior to London open. London is now open and we have missed the entry. So I will cancel the order. But essentially what we're trying to do is get a breakout long or a breakout short out of that tight range. If we go half of the risk that we take, so in this case, that would have been 18 pips of risk, you would have taken profit at 9 pip mark, which is where 36.80. So there is your take profit level, your first take profit level, 1.3680. And no need to worry about the short because the short would have been cancelled at this point. So that is the only target in mind. If it doesn't reach there and goes back that way, then we've done the right thing. Pretty similar to what happened yesterday, actually. What happened yesterday was this was the last, well, these were the last 3 bars, that one, that one, that one. And we put our entry long just above here and we got tipped in, tipped out, and then it went. Now, this is perfect for Shukri. This is Shukri's system, right, of trading my entries at the second attempt. So it's called Slingshot 2. And I'll probably talk about this further later down the track. You're going to miss some trades, right, where Slingshot 1, gets the breakout, then happy days. But if it doesn't, Shukri has proven more often than not that if we use exactly the same levels and trade it after a retracement, so in other words, price takes us in, takes us back out, retraces, then put the entry. I don't know that that would have been a decent enough retracement for him, to be honest. I think he'd like to see something deeper than that. And I would too, to be fair. But the second entry is the one that made the money. Interesting. Yep, Slingshot 2. Dual Wi-Fi now. I'm not sure what dual Wi-Fi means, but anyway, that's all good. So there you go. Slingshot 2 would have been a winner yesterday, whereas Slingshot 1 was a loser on this particular scenario. Worth noting, guys. But look at that beautiful, beautiful left shoulder, head, right shoulder, way she went. I wish it was that easy day in, day out. It's not. And I can assure you today is one of those days where I have got I haven't got no idea. I've got a very clear idea of what I want to do. What I don't have is a clear idea of what is actually going to happen. And of course, because most things happen around the US dollar, this is one of the first places I visit most days, and it's the dollar index. Now, we've spoken at length about this. And my thought process last week was that we would get a retracement off what was then, and I worked this magic with my guys this morning. We had a trade line coming through here. And we figured last week that we would hit that level and come back off it and put in a right shoulder here at this level here, this horizontal level. Then that didn't happen. In fact, it went long and took out the high, or took out the trade line. At that point, of course, we're thinking we're going to come back to it, which we have done at this confluence area, which was the shoulder that I was talking about earlier. Now it appears, and Ash and I spoke about this, I think, on Monday, what if this is actually the left shoulder, and like last week, we were seeing the right shoulder down here, but it actually comes this week. Whew. They make it hard, don't they? But that, at the moment, looks like it may well be the case. Then I go into slingshot mode and I put my trade line up here. And I've got a scenario that tells me approach of a resistance trade line, pull back away from it, classic slingshot entry right there above this bar. I can't trade the dollar index because I don't have a broker that trades it, but I have to turn that back into something that makes sense. Most people will tell you that euro dollar is a proxy for the dollar index anyway, because I'm not going to use the figure 70%, but some people will tell you that 70% of volume is actually weighted against euro dollar. So let's go to euro dollar and see if we can put that into place. So one of two things we're looking at here. We're looking at this as an acceleration point right here, where we go at, I guess, at least to that trade line, which is maybe a confluence area there around about, let's call it 91 the figure. Then, of course, we can go to 92 the figure, which makes a lot of sense also. So I think that's potentially there, which means flip that upside down, euro's coming down and Aussie's coming down, pound's coming down, Kiwi's coming down, CAD's coming down, or US is going up against the CAD. So that's what's firmly in my mind. Yeah, look, we spoke about Yellen as well yesterday, and we thought that's why the market was moving. And potentially that is true. And certainly the market reaction of the dollar would indicate that, because, and those of you who are not in the picture, Janet Yellen, the former chair of the Fed, who is now being, well, apparently appointed as the Secretary of the Treasury, is suggesting that the US dollar be placed into market forces rather than be manipulated is the wrong word, but shaped, if you like, by the Fed and the likes of monetary policy and even fiscal policy. I think she wants it to be a free-floating currency. And that has set the cat amongst the pigeons, because if that is indeed the case, then the market is thinking, okay, if we actually go that road, then the dollar's worth nothing. Okay, it's not nothing, but it's worth a lot less than it has been in the past. And for that reason, I believe, is why we're seeing the sell-off at the moment, apart from the fact that we've hit a resistance area. The question is, for me, and there's been a lot of speculation around a dollar rally, the question is, has the dollar got any reason to rally? And I'm no economist, and Ash will probably come into this very shortly and give me 10 good reasons as economically why it should rally. I can't see one, frankly, but that is the question that's on my lips. And it makes it very, very difficult for me to get a clear picture of which way I want to trade anything, in particular against the US dollar. We've got a very strong reason to think that the Aussie in particular is going to continue to outperform the dollar. So is the Kiwi, so is the CAD. All of those, let's call them commodity currencies, but they're also risk-on currencies, and the market has had, certainly historically over the last few months, believe it or not, an appetite for risk. So I see that as being a continued sentiment in the market. What I don't see is the market telling me, well, the commentators in the market telling me that the dollar is going to continue to weaken. But now that this Yellen thing has come into play, I think the market is making a statement on that. It's not dramatic and it's not emphatic, but it is there. the question mark again, as I said earlier, is are we going to form this right shoulder that Ash and I have been speaking about? And has the dollar got enough backing, if you like, or has it got enough punters that want to speculate that it can go long to actually force it up off there? That's the big question on my mind. And it is really making it very, very difficult for me to process, because I see things like dollar CAD, for instance, which is what I wanted to trade this morning. And in fact, I did place an order on it because I thought this was a lovely little bar to trade along. And so it is from a technical point of view. But here now, and this is going back to that exact same chart, we are bang on the left shoulder. And if this is to be the right shoulder, then here we are. What do we do next? Have I got the confidence to actually trade the US dollar long is the big question I've got in the back of my mind. And I certainly wouldn't want to trade it at market. I would definitely want to see a momentum shift. And at the moment, that momentum shift is not there. But that doesn't stop me placing an entry above that bar. So I want to see how that bar closes. That's a daily chart. So tomorrow I'll be looking for that to maybe look exactly like that. If I saw that sitting there, then I think I'd be very, very keen to trade it. But that may happen earlier than that on something like a 4-hour chart, where we've got that exact candle that I'm talking about. Whether it's come low enough for us yet is entirely another story. So, Ash, g'day, mate. I'm really in two minds as to whether the dollar can rally. I think if it can, it's the level that we're at right now on dollar CAD in particular that we can look for. But if I look at the dollar index, there's still a way to go. There's still a way to go.
I'm completely with you, mate. I think the dollar's...
Put your mic down, mate. Can't hear.
Sorry, buddy. Yeah, I'm with you. I think the dollar's just a really dangerous play. I can't find the reason it would rally either. Yellen was speaking yesterday, and obviously, you know, she's presenting this big stimulus package. It's not been passed through. It's just, you know, that's her suggestion, but she has a significant amount of power.
So we're actually selling on. This is a bit different, isn't it? It's topsy-turvy. We're selling on a rumor at the moment.
Yeah, we are. We are absolutely right. And the thing I can't square is the debt that the US are accumulating is comfortable right now, probably because of the low interest rate environment. So how can the Fed raise interest rates? You know, if they know that their government is holding all this debt, then how can they possibly responsibly raise the interest rates? But it might, obviously, things get taken out of central bank control sometimes, you know, if inflation kind of starts to go through the roof. But we're not really seeing that, even though in the UK today that there was a bit of a spike in inflation. I wonder whether that is a bit of an outlier for the rest of the market across the board, because you think it's got to be coming. And again, I'm with you. The dollar CAD I find a difficult one, because when it comes down to the currencies that I prefer to be in long, is the commodity currencies, the likes of the Kiwi, the likes of the Aussie, and the likes of the CAD. So to trade the dollar against those ones, I think would be even harder. But you know, particularly the Aussie would be I'd be bullish on, and I'm almost at the point where I would prefer to wait to see the dollar strengthen, if it was to strengthen, so I can sell it off, because I just think that the upside on the dollar is just so dangerous. It just doesn't seem. It's not giving us a nice, clear kind of image, and it appears that what is more likely to happen is that the dollar will rally because the sellers step aside while they allow the buyers to push the price up, and then they jump on board. But I don't really want to be in that group, because it's almost like it's a kind of dead cat bounce kind of scenario. So you're trading with people that are counter trend trading, and not only counter trend trading technically, but counter trend trading fundamentally as well, because the fundamentals just aren't there, and it's purely about the debt. You know, I don't see how the amount of debt they're taking on is sustainable.
Well, you know, one of the first things you learn as a adult, I suppose, or somebody who starts to earn money, is that the more debt you are in, if things go bad, you're in deep SH1T. It just
Yep.
gets deeper and deeper
Yep.
and deeper.
Yeah.
And this seems very much to me a case in point for the dollar. And look, I don't want to say I'm a genius or anything, because I'm certainly not. But you know, I can't believe how long I've been saying this. The dollar is trash because of that particular scenario. They have just continued to be way above their living above their means, and I think finally the roost. What do they say? The chickens are coming home to roost. And I don't see any upside in the US dollar anytime soon. Rally maybe. Why? Don't know. But you've got to be seriously. You've got to be a seller.
Yeah, I think you have to be on that side of it, and I think that, you know, when we look across the board, like, you know, looking at, as I said, looking at the commodity currencies appears to be the best course of action when it comes down to being that seller. Somebody's asking, will the CAD weaken over the cancellation of the pipeline? Biden will cancel this project tomorrow.
That's oil we're talking about, I guess. Is there an oil pipeline?
Well, let's have a think about this. So, I'm not up on this story. So, CAD weaken on the cancellation of the pipeline. So let's think about this.
Where's that question, by the way?
It's in the chat room.
I don't see the chat for some reason.
Oh, okay. Yeah, it does lose it for me sometimes as well. It won't help.
It's frozen.
It won't help. I mean, one thing I would say on that, John, is that you know, if we kind of universally agree that the dollar is a dangerous play, then things like that won't help the CAD. And also, we also have to remember that the US is the Canadians' biggest trading partner as well. So that may not help things out with the CAD. But it's probably not the best play to trade it against the dollar. Yeah, the oil project. I get it, because obviously Biden's moving towards a cleaner environment. Now, I don't know whether I don't think that cleaner environment is going to come into play. It will be a very gradual process, I suspect. I don't think that they're in the position really to kind of just change things straight away. So there's a possibility. I'd want to trade the CAD probably against something else, probably against the Aussie. I'd prefer the Aussie. Looks to me like just the best currency right now. It just looks like the strongest play at this particular stage.
I don't disagree, and I see it going to 180, 150 in the next few days even, but it's got to retrace as well.
Yeah, well, to get into it, I agree. Yeah, I agree. And a lot of this stuff has to retrace. I mean, you know, some of the stock prices, and again, the Nasdaq keeps going. And this is the thing about stimulus, is that the stimulus will inflate the picture for stocks, and it just makes it really dangerous. You know, if we think about what we had before with the pandemic really created an opportunity for anybody who had some cash in the bank to go out and make some big gains. So looking at that on a kind of in a micro environment, that means that, you know, and let's bring in some charts, unless you're still going there, mate.
No, I'll just quickly repeat what I said about the pound. We missed the entry on the pound, and that's probably a good thing at the moment. When I say we missed the entry, we just couldn't get it on in time. It went beyond the level of entry before we could get in. So I just cancelled the entire trade. If you just joined us, that's what's happening.
Yeah, fair enough, mate. Fair enough.
Thanks, Angel. Got that message. Yeah, totally understand. So Ash, if you see the chat messages, and could you relay them to me?
Yeah,
please?
No problem at all. No problem at all. So let's just have a quick look now. Let's forget right now that we are looking for particular setups. Because the thing is about setups is that they will appear in areas that we don't want them to appear in. We don't want setups when the price is so elevated, drawing us into trades that we're not going to make a lot of money on, and we're going to have to get in and out of. Now, the first thing that we need to figure out as well is what kind of move over what time frame are we looking to trade. So let's say that we are looking for longer term positions, because with the longer term positions, then we can filter out a lot of the noise. With the shorter term positions, they're just a bit tougher, and we saw it yesterday actually with gold. We were talking about gold as a potential long above the 1842, sorry, 1840, 1841 level, around about here. We're looking at for the long on that particular point along this trend line. But look what happened. The price came down, it came under the trend line, actually closed under the weekly pivot, bounced back up again, and then it has given, ultimately it did give that short-term move to the upside. I don't think it's going to be sustainable, but there's a short-term move to the upside with gold. So it becomes really dangerous, and this is what I mean about noise. This is an hourly trade, if you like, or a 4-hour really at best. And it would have taken a lot of people out if they put their stops under the weekly pivot. But what we're really looking for is a genuine retracement that is a retracement and not a reversal. Now, we don't know what's going on with gold right now, but let's consider the stock market, and let's consider the stock market over a longer period of time. The opportunity that arose with the stock market was on this on the pandemic. We saw the pandemic drive prices from these places here down again. Now, this isn't the opportunity because it's too dangerous. We don't know it's going to turn at that particular point. But this point here is the opportunity, because this is our first resistance point, and then there's a genuine move to the downside that we can trade. But the key really with this is this point here. It brought the stock market in the United States down to half its value. So any decent setup while it's climbing back up again makes it attractive. You could argue that this is an opportunity as well. And let's think about it in percentage terms. 3,500 for the S&P comes down to 3,250, let's call it. So we're looking at around about an 8% drop. Now, if we're going to get some value, we really should be looking at a 5 to 10% drop in anything that we want to trade before we start thinking, okay, now we have got a retracement area that we can get involved in. These ones that we've seen here, just really difficult. They're really, really difficult to kind of get on board, because how do you hold on to this stuff when at the back of your mind you're thinking, well, this area hasn't really been tested properly yet, and until that area gets tested, I'm not really that comfortable with it. So we could get pushed into trades, but do we really want to do that? When we see setups in these areas, yes, it makes money, but we are literally hopping in and out of the market. And if we are short-term traders, completely different picture, and I appreciate that. But if we are trying to buy something and hold on to it and then move on to the next thing that we can do, then we need a decent move to the downside before we can get involved in it. Now, gold probably just about qualifies for that. Is this a decent move to the downside? 20 down to, yeah, that had a 10% drift down to the downside. So gold is interesting in this area. I'd like it a little bit lower, just because I see the technicals suggesting that they are coming lower, and I don't see the COT report suggesting that we should be getting into gold just yet. So the commercials aren't jumping on board. So that's the only reason I haven't decided to take a position in gold as yet, because the retracement is probably deep enough. There's probably enough of a pullback to get involved in that one. But back to the Aussie is just impossible, really, because the Aussie is doing what. It's not even doing what the Nasdaq's doing. This was the last opportunity that we really saw in the Aussie to actually have some value, from 73.73 down to 0.7. So there is enough of a pullback there to get us involved. I think that would just be slightly over 5% to the downside to get us involved, and we could jump on board. But now we're in this area. We're really just we're feeding on scraps. to try and get involved in this. So it does mean waiting, and that's the thing about trading, is that the people that are patient and sit in the sidelines and wait for these things to happen in the market, like what the pandemic did to drive the Nasdaq down to here, have doubled their money. You know, they've doubled their money in less than a year. They've managed to double their money. Now that's on one trade. You know, that's trading one market. Now what we're trying to do is double our money, of course, but if we are effectively trading in and out of markets a lot, firstly, we're paying the broker every single time we trade, so that diminishes our profit line. And secondly, we are having to concentrate, you know, a lot of our efforts on trying to pick things every day that aren't of great quality and aren't of great value. So we're really waiting for a genuine move to the downside, which will happen. You know, you don't get many of them during the year, but when they do happen, you've just got to be ready to go for it. So I completely take your point, mate. I think that, you know, trying to trade sort of something like the Aussie at this particular level is not. It's not the level that's the problem. It's the fact that there's been no flush out. There's been no flushing out of positions to really give us any value that we can buy into it and hold on to. Bitcoin, we've seen the same thing, and then all of a sudden, and you know, you can see this manifest itself. Bitcoin's a really good example of what I'm talking about in many respects. Let's bring Bitcoin in.
Fortunately, I'm still in the Aussie, but I'm in the Aussie against the worst currency I could be possibly against it at this particular point in time. It's the Kiwi.
The Kiwi, yeah.
I mean,
yeah.
it keeps going, but
yeah,
you know, I'd much prefer if it was against the dollar.
Yeah.
I can't look it, obviously.
Yeah. I mean, I think the dollar or the euro, I think, are the two really interesting ones to be selling against right now. So Bitcoin's a really good example. What we see sort of like with Bitcoin is, you know, anybody that managed to get this retracement here, and it might not even be, I mean, it's not deep enough. It's not nowhere near a deep enough retracement, but it's not too bad. But we're on a 4-hour chart here. But anybody that kind of gets into these areas, it changes to a daily. This one's okay. Actually, this one's not too bad either, but you get in with these little drifty ones to the downside here, then you could be asking for trouble before when it starts.
You're getting into that enthusiasm part of the cycle, aren't you? Where it's,
exactly.
Okay, this is going not to the moon, not to Saturn, but to Pluto doesn't exist anymore. But let's say Pluto, and people think this can never stop. So that's the enthusiasm part, and that's a troubled area.
Absolutely. I'm just going to try and bring in something here, just because you've mentioned it. You know, this is this is worth mentioning. Let me just bring this back up here, and it is. Now, we don't need to understand this in great detail, but we do need to understand it. And that's the sentiment cycle. I don't know if you can see that that clearly, but you can see that what we've got is the return to confidence here, returning of confidence here. Now this has come off the back of this run here. So we've got panic, moves up, discouragement, climbing the wall of worry, a little bit of aversion. Then then it starts to move to the upside. Now I think we've had the denial in many things. Then we get this return into confidence, and the market starts plumping to the upside. There's a buy the dip scenario, and then all of a sudden a big enthusiastic move to the upside, and then bang, it starts to fall again. And really, you're always trying to pick any market that you're trying to get into up somewhere in this lower band down here. You know, it's the toughest area to try and break into it, but you're trying to pick it up in this lower band down here. As soon as you're playing up here, or let's say you're playing up here, then there's some sticky moves before you get that last enthusiastic run, and that makes it quite stressful, up here. If you can get in down at the lower end of the sentiment cycle, this sticky move doesn't matter because you're all the way down here. you know, and you're able just to, you know, just to wait for that one last big blast to the upside before before the big sell-off comes. Now, I think we could argue that you know, Bitcoin's had that. If we look at what's going on, and I think Shukri probably has put our guard up on that one, because he's talking about getting out of something like that. It's the same really when we look at the Nasdaq. I'll bring this back to Fusion. It's the same sort of thing if we look at the Nasdaq as well. You know, is this here that kind of that buy the dip mentality? And if we look at the sentiment cycle here, just remember this point here, down here, and what we have is this. Is this the buy the dip mentality, the return to confidence, buy the dip mentality, and one last push into enthusiasm? We don't know how long this last phase lasts. We don't know how long any of the phase lasts. But what we do know is that there's a good chance that we're in this enthusiastic area, which the next thing to happen is a big drop to the downside. And that's really where we want to start getting involved in something like this, you know. I'll bring we'll have a look at the Nasdaq in regards to this in many respects.
That really is the world I live in, you know. I'm living for those tops. I'm living for those lower highs. I'm living for those higher lows.
Yeah,
that's where I live. That's the space in which I trade, you know. It doesn't have to be on the end of a trend. It can be in your range, you know. But it's the same principle. It's exactly the same principle.
Yeah. Well, and the thing is, if you're day trading, it's a completely different environment you're looking at. Now, with a day trade, you're not having to look at weekly charts. Obviously, you are starting off with your daily charts and trying to understand where you are, because obviously there's money to be made here, there's money to be made here, and there's money to be made here. So, you know, day traders have got many more opportunities, but they've got a much more stressful lifestyle, and you know, they've got to be a lot more proactive in front of the chart. So you've got to kind of like decide which kind of trader that you are, and then take advantage of it. But we're still
and that will change over time as well, won't it?
Yes, it will. Yes, it will. It will. Yeah, I mean, it has for me. I've got to be honest, mate. I'm really involved in markets. I'm in front of the charts a lot, and the reason that my particular style has changed is that I now see value in trying to pick up a portfolio of stuff. So I want to own quite a few different things at the same time, rather than trading in and out of positions like I do with the FTSE. I still do it with the FTSE, but it's much less regular for me to be doing that.
Because it's less risk. You're going into dare I say it, the getting of wisdom.
Yeah.
If I can put it that way.
Yeah, absolutely. Do you know what? There's two things with it. There's less risk and equal, if not better, reward. Because if we go back to the Nasdaq's doubled in price this year. So, you know, if you are a longer term, you know, if you take longer term positions, then you can hold on to things for a long time, and make the same money on one market than you know, you'd have to do with a day trade on multiple entries and exits. But either way, so the Nasdaq is now at the top end of a range, so that's untradeable. You know, on the day, we're talking about on the day. The AUS 200 again at the top of the range. Now, it will be difficult to flip positions, just as we talked about with the dollar. It's difficult to flip positions and start looking for downside in the market right now, because the stimulus is really kind of like giving the market a placebo. It's given this placebo effect that you can't really understand why you'd put your money anywhere else but in the stock market, you know, into stocks at this particular stage. So the selling becomes dangerous. So all you're doing really is trying to pick up the lows, move back up to a range, try and pick up the lows, move back up to the range. Here's the IBEX as well. Here's another one. Is this at a point that you'd want to start buying? Probably not. We're probably waiting for at least a dip down to the monthly pivot, maybe even a bit lower. I'm not really keen on the IBEX personally. I think the IBEX is a sell because of the situation with COVID. Doesn't look too bad on the DAX, but is there, you know, and again, we're talking about day trading here. So, you know, the setup would have to come on a day-by-day basis, and we just don't have it. Actually, there's a daily pivot really in the way there, and actually when we come down to looking at 4-hour patterns, that looks like it's a little bit too close. So I think the opportunities are quite sparse. And I'm not going to jump into trades. I'm not going to get myself involved just because it's my job to make money out of the stock market. I'm not going to or currencies. I'm not going to get involved in the financial markets unless I have the opportunity, or I have presented to me an opportunity where I can actually get some value and a decent price. And at this particular stage, I just don't have it. You know, there's just nothing there. Fundamentally, we're really looking at what we should get now is a bit of growth. We should get some growth coming into 2021. The big problem is, has that growth been priced in? You know, and I think for many of this stuff, it probably has. So looking at the dollar and the Aussie, the only way that the Aussie becomes interesting is really more so that you're trading the dollar and thinking, okay, well, the Aussie is probably the best currency to trade it against, if not the Kiwi, and then the CAD. But we need to see, you know, again, that just a little bit of strength in the dollar. The dollar needs to pop to the upside. So we're in a little bit of a crossfire, in my opinion, mate. I don't want to get involved in bounces. Really, I'd much prefer to kind of go, that's my direction. Let's wait for the direction to come back at this stage. And one of the reasons that I want to do that as well is that the volatility really isn't there at this stage. You know, we do have a bit of a drop off in volatility, and that means that day trading becomes very difficult as well. You know, with no volatility, that the day trading environment becomes even harder.
Add to that, we've got a very uncertain week. We've got,
yes, we do.
3 central banks with statements.
Yeah.
Canadian, Japanese, Euro is the other one, I think, isn't it? We got ECB this week.
Let's have a look.
I can't quite remember, but I'm pretty sure there are 3. And then you've got this, I'll call it a spanner in the works with Yellen. And of course, I don't know what on earth's going to happen overnight with the inauguration of maybe nothing. Maybe he just gets a smooth transition. But
yeah,
there's
you're right. Yeah,
well, you know,
it's got to be in the back of the mind, isn't it? Look at CPIs as well from now. Let's have a look at this. So the pound CPI jump, the previous at 0.3, big jump really, doubles the CPIs. Now let's have a look at this in context. For CPI, oh gosh, this is year on year.
I'll have a look at EuroCAD shortly, John. No problem.
Yeah, it's edging up, isn't it? It's starting to edge up a little bit. Look at CPIs. What's happened to CPIs over the last 3 years? It's just been dropping and dropping and dropping and dropping. This really does need to start spiking to the upside if we're going to see some proactive moves in the pound. Core CPI year on year, a decent pop to the upside though at 1.4%. Now remember, core CPI, we're looking at a 2% target, so this is actually quite positive for the pound. You know, obviously, so you know how those prices are arrived by becomes a little bit of a different question. But that's quite positive, you know. Looking at that, so that's a decent pop to the upside for the United Kingdom. PPI outputs not too bad at all. RPIs again a pop to the upside. So it looks like inflation is just having a little bit of hope there. Be interesting to see what the house price index is as well. Then we get some CPIs out of Europe. You know, what's their picture going to be like? But yes, you're right. So we got the Canadian Central Bank. We have got the pound, the UK central banker speaking as well. We got Biden. Employment numbers from Australia. Obviously, the big one we need to watch for Japan is this business outlook as well. The outlook report. I think that's a really integral number. Yes, Euro press conference. You're right, mate. CPIs as well from the Kiwi, so that's their big number this week. So yeah, it is a bit of a bumper Thursday, isn't it?
And
Yeah,
that on the back of what potentially. How do you read this inauguration thing? I don't know. Is Trump likely to do something absolutely out of the box? Maybe. Does that affect the dollar? Maybe. Is someone going to take a shot at Biden? Maybe. There's all of those questions, and what does that
yeah,
do to the market? How does the market read that? If none of that happens, do we see an equilibrium? If one of those events happens, what happens? It's tough.
yeah. Well, the market's quite quiet now. I'm just looking at stocks. How things have opened up this morning. Um, and we've got 70% of stocks in positive territory, but there's a couple of them that are starting to push to the upside a bit more significantly. Burberry, interestingly, missing estimates and finding a difficult trading environment. They are higher today, and I guess that might be down to some value in price. Yeah, a little bit down to value in price probably with Burberry, but I find that a little bit surprising that people are buying into something like that. Industrial metals are going higher again, so looks like some further confidence of some strength. When we see industrial metals starting to move to the upside, it looks like there's some confidence in economic strength because of that. But yeah, aside from that, there's nothing really kind of like shining. There's no real shining light, but looks like a tepid but higher day today. If we want to have a look at the FTSE, the FTSE looks like it may well be pushing higher today. Looks like it's got to get above that weekly pivot. So no real reason for the FTSE to push lower. I still don't like the price here. I still want it just a little bit lower before I get involved in the FTSE. And just because of what we've got on the calendar, it looks to me like that doesn't look too bad, does it? Looks like there's a little trend line down here. Yeah, it looks like these lows here might well be picked up. And then another pop higher. Stimulus coming in is potentially going to drive these markets much higher. So I can see the reason to be trying to buy into it, and maybe the price is okay. You know what? I might even take a position in the FTSE. Let's just see what the dip is like. You see, we don't get our 5% dip here. This point here is a 5% dip. So we do a 5 to 10% dip is just a lot more attractive. So I'm looking at really at the FTSE at 6,600, and I just don't know whether it's going to come down there or not. But 6,600 is the price that I'd like to really start buying up again before I got into anything. But on a day trading scenario, a break above the weekly pivot would look okay back to the highs. But then you're having to trail stops pretty tight, I would have thought. So let's watch out for it, mate. I think this might not shape up today anyway. It might not shape up until tomorrow. It might not shape up at all until we get that stimulus announcement, coming out. The numbers look okay for on the whole for most things anyway. But we don't know, just a bit sleepy. I'm finding it really difficult to kind of get conviction. To get involved in the markets right now.
It's really if I didn't have to be here talking, you know what? I'd be downstairs having a beer.
Yeah.
And not watching the markets at all, because I'm really not seeing anything that enthuses me. What I did see this morning was an opportunity. If you are of a mindset that the dollar can rally, there's opportunities there. But if you're not, then it's a complete waste of time. High risk trading is what I would call it. And I don't have the appetite for it, frankly. I thought the dollar CAD was an interesting position to take, and it still is for me. But you've also got to take into consideration, is the CAD news is not today, is it? Or is it?
The CAD news is...
Yes, it is.
It is.
Yes, so it's at 3:00 today. Your time. So it's now what, 7 hours away. If I were in that trade, I'd be very, very happy. And I guess to some degree, I am in a trade against the CAD, because I'm trading Euro CAD short. And when you're done, I'll go and answer that question of John's as well.
Yeah, let's do it, mate. Yeah, go for it.
All right. Let's go to Euro CAD then. Now, Euro CAD, we've had an interesting bit of a ride on Euro CAD over the last, how long is it now? I think we started trading it back here somewhere. So 1, 2, 3, 4, 5, 6, 7, 8, about, 3 months ago, let's say 3 months ago. And we're still trading exactly the same scenario. We're trading this double top Batman mask, right? Remember, we were starting to talk about Batman mask here, and we thought we would go straight down to this level and we would have Batman mask. What we've had since is a whole lot of nothing, a whole lot of consolidation and nothing else. However, we keep getting things like these reversal bars, one here, one here, one here, and finally, after a decent retracement, one here on the monthly chart. Now, we spoke about this at length last week, I think it was, maybe even the week before, where we had, and of course, the top of this channel is a trade line normally, and we had a break back below it and a retest of it. And we spoke about this candle here and why I didn't want to trade it. Error of judgment. Well, not really, because I've got a system that I follow, and it wasn't part of the system. But to me, it's still very clear that at some stage, and we may be 10 years older, John, you and I, but at some stage, this is going to here. I've got absolutely no doubt about that. So backing that conviction, if you like, I've got to look for something that looks like an entry. That was the best entry right there on the weekly chart, without question. That's exactly what I was looking for. And that happens, of course, over the Christmas break. But the next best entry comes on the monthly chart. It's exactly the same. It's a retracement off a sell-off, which forms a lower high. So for mine, this is going to here. I've got no doubt about it. I've got to back that. And when I see a setup, I've got to trade it. So right now, what we've got is, sorry, I'll go back to the chart that we're trading. We've got a bar that's trying its little old puffer valve out to get down to the bottom of this range, right? It may take, as I said when we started, it may take a long time, and we're going to be in this trade for quite some time. The good part is we've got a positive spread or a positive swap, so it doesn't cost us anything to stay in this trade. Why do I think it's going to change anytime soon? I don't. I think everything's doing exactly as it should do. What we've done is we've come down, and I said at the time, I hate to be taken in on the third bar of a sell-off or a rally, if that's the case, because the very next thing that's going to happen is you're going to get a retracement. It's going to happen. You know it's going to happen. It's going to put you in a downturn, or what's the word for that? Can't think of the name. My mind's gone blank. But it puts you in negative territory, right? You've got to be able to withstand that in your psyche and say, okay, we've had this is going to the moon because of what, 1, 2, 3 candles, all of which are not that positive. It's gone to a level, come off it, gone to a level, come off it, gone to a level, come off it. I'm still of absolutely no doubt in my mind that we're at least going to here, and in the bigger picture, we're going to here. So I've got to stay in this trade, and I don't have a problem with it. Drawdown is the word I was looking for. Look, we're in drawdown at the moment by what? I can't remember. SFA, I think, it's no big deal. We're just shy of entry. So to answer your question, it's a matter of where your psyche lay in the first place. Is it that you just want to trade because you're in a trade, or is it because you have this setup that's telling you that price is going to a certain area? And in this case, absolutely nothing's changed for me. We've got this big tweezer top, big double top sitting here at a level, and I keep going back to this, I know, I harp on it, that's only really been pierced through a global financial crisis. So this is extraordinary times. And at no other time have we been able to go above this level. So why now? Why now? Why are we going there now? Are we at such an extraordinary time in history that suggests that we're going long? We could be. Things could change. It could really, really change. So it's everything's possible at any stage. Go back to 2015, January 1. Who'd have thought that Euro Swissy would move 2,000 pips in a heartbeat? It did. It happened. And these are the sort of things that are possible. So everything's possible. But there's nothing here that's changed. Everything is exactly the same as it was. And do you expect a retracement after a big sell-off? Yes, you do. So that's exactly what we're seeing here. Now, let me add this to the equation. You can very easily have a look at this and say, all right, we've got a very strong level here. At what stage do we start to think that we're wrong? Is this a false break of that level? This may well be the case. Now, you can actually cover your position by entering a long here above that bar. Now, I'm getting into very, very complex and advanced territory, and I really don't want to go there. But you can cover, if you're starting to worry about that. Where are we at entry? We're pretty much at entry, right? A little bit above it. So we're a little bit in drawdown. If you're concerned that the position that you've taken is going to go against you, and look, we're a long way from our stop loss, you could cover that position by entering long to make yourself you've got okay, I'm prepared to lose whatever that is. If that level there is 1/8% of your balance, right, of your trading account, and you're prepared to lose that much, you could then enter an equal and opposite position that negates anything that could be lost here. So you could finally get into, and the way Ash trades, if you've got no leverage, you could actually get into a winning position by going against yourself. But you could absolutely put an equal and opposite trade at that level that would give you a guaranteed loss of X, whatever that is, 1/8 of 1%. So it doesn't matter how high, if it goes to stop loss, you're only going to lose that amount. You could do that. You've just got to work out the exact amount of or lot size. That's all you've got to do. Ash can teach you how you can actually make money out of that unleveraged. I don't trade that way, but I'm going a long process here. But if you're in a spot where you're concerned, one of two things you can do: get out or cover the position by going in an opposite direction. So at the moment, I think everything's okay, John. I think we've got a nice break and retest of a horizontal level, and I've still got no doubt that we're going where I believe we're going. So that was a very long answer, and I apologize for it, but cancelling of, look, that comes into the play, and I've got no idea. I've only just heard of that cancelling of the oil project, and I don't even know what oil project there is, to be fair. So yes, that does come into it, but I don't see the market reacting terribly viciously against the CAD at the moment, frankly. So I think the CAD, to my mind, has got far more and better prospects of rallying, or longer term, medium long term, of being more value than does the euro. I think it's got far more things going for it. So I'll leave it there. Sorry.
Yeah, I'd agree with that, mate. I'd agree with that. The euro to me is similar to the dollar, and Germany's got into this lockdown again now, and I think that's my big problem as well at this particular stage is that the rollout of the vaccine and the utopia and the euphoria that was kind of created at the end of last year when we saw a big spike in everything um, hasn't really materialized into this year. I think we've started this year quite sluggish, and it's one of those things that people don't appear to be kind of like looking at value, and that's one of the biggest issues that I have really with stocks and currencies is that people aren't really trading on value, and we are in such a different world. If we think about traditional tools that a central bank would use to control its currency, really it's more down to do with money supply and to do with interest rates. But we've got this bond buying thing, which almost has become the norm, isn't it? Ever since the banking crisis that we saw in 2008, 2009, and QE came along, we seem to have this new thing that QE seems to be, the play that continues to go on. And I think that's why, you and I are probably drawn towards saying that the dollar is an absolute dog. Because the QE kind of tool that has been implemented right across the board as well globally. We've got this new QE tool seeming to be the kind of the new state of play. It just really devalues currencies, so significantly, and it probably this is why we're also brought back to cryptocurrencies. I did see Shukri that we had Ethereum at all-time highs yesterday. Very, very interesting, and you have to kind of be looking and leaning towards those cryptocurrencies because of this environment that we seem to have. But it does mean that valuations, back to that, it means that valuations are just getting knocked completely out of kilter. People are buying stocks really because they don't know what else to do. When they buy stocks, there's a direct knock-on effect with currencies, because if you're buying stocks in the United States, then you need to own US dollars. If you are an importer, then you want higher currency prices, and you manipulate the currency to your advantage. Well, you don't manipulate the currency, you buy and sell the currency to your advantage.
I used that word earlier and I retracted it as well.
Yeah, well, I mean, when central banks, I think you could probably just about put
well,
it on,
they attempt, they
attempts,
do.
Yeah. But it does mean that valuations are just not accurate. Things aren't really of genuine value. People aren't, companies aren't making the money that they should be getting to get us our returns. And when companies don't make the money, that knocks onto the country. So the country isn't making the money. The United States just isn't making the money it needs to make to get themselves out of the mire. And you see this debt pile just kind of just piling up on the left-hand side. And you think, how is the US economy still afloat? And the way it's afloat is with this QE thing, this completely false kind of view, false.
It's the emperor's clothes, mate. Really,
it is. Yeah,
it really is.
And the problem is, the more you dig into that, and that's some of the issue, when you become a professional trader, that you learn more and more about this stuff and how money's going, and it makes you a lot more cautious about things. But because you understand and realize that we are literally on paper thin ice. And then you have to start reacting to the markets in a completely different way. Understanding that risk has to be protected. At all costs, risk has to be protected, because, as you just said, Jeff, what we saw with the Euro Swissy, I think if anybody lived through that, then you would understand that things can change like that, and you can get wiped out like that.
Change people's lives, big time. And I know, this is part of my presentation for the retreat next week.
Yeah.
Is it next week? I think it's next week.
It is.
Is it? Geez, I better prepare it. this is a different world in which we're living, and if we haven't recognized that yet, we need to get on our bike and recognize that. If you were trading with leverage and got on the wrong side of Euro Swissy in 2015, you ain't trading anymore. You're on the beggars queue. You know,
you're still paying back your debt.
Absolutely.
Yeah.
These are the things we need to take into consideration. This is why, as you correctly say, risk is a very, very big factor going into these times about which we know very little.
Yeah.
And, you know, Shukri's been studying this for quite some time. And I applaud him for that, because he's seen that there is change coming. Whether that's the vehicle of change is completely beyond me. I've got no idea. But we are definitely recalibrating. There's no question about that in my mind. Yeah. And the more you open yourself to what may happen in 2, 3, 5, 10 years' time, I think you're going to stand a far better chance of being in a good position than if you look backwards. I think backwards.
I agree.
Backwards
and
is
you
not
know,
the place to look.
If you don't have cryptocurrencies and or gold and silver or some precious metal in your portfolio, then you know, I think you could be risking, if you've got a longer term investment horizon, that is, then you are risking quite a great deal. So they've got to be sat in there somewhere. You know, you've got to have that stuff sat in there somewhere, because if the world doesn't blow up, your stocks will do great, or your risk on currencies will do great. But if it does, when those things start to really tank, cryptos and or gold will do very, very well. So, you know, hedging out that risk is really, really important to do. Yes, you can do it with stop losses and everything else, which is one way to do it. But if you want a nice kind of balanced portfolio, those things just have to be taken into consideration, because we really are in an environment that is just not real. It's just not tangible. The way things the way things are moving. It's crazy, and it probably won't happen. You know, we probably won't see the real effects of this for the next 2-3 years. But we're almost free to do what we want, but we just have to be aware of it. And while we're aware of it, just be ferreting away some hazelnuts in the back, just for when the winter comes, and everybody should be okay. I would have thought.
I think, and I can't even remember. I wish I had the recordings of what I say at times, but I think I said when COVID arrived that it may not be the cause of change, but it certainly will be the instigator of change. And I firmly believe the case, because we're going to be a lot of places, a lot of countries. They're going to be in such financial stress and difficulty coming out of COVID that there's your trigger, in my humble opinion, for change. And we are going to recalibrate, and what that looks like.
I better go, mate. And I've also got a call coming in. All right, buddy. See you guys soon. See you tomorrow.
Right, mate. I'll carry on, guys, and just go through a few of the things that I'm watching. And as you've probably gathered, not really prepared to trade at the moment, but I think there are opportunities out there. But risk has to be, and we just spoke about it, risk has to be your number one priority. And going back, John, to what I was saying before, if you are uncomfortable in any position, you've always got the option to get out. But I don't think that's the right option. And I think you recognise that. And I always said when I started trading, this is, in fact, not when I started, but a few years after I was trading, I thought it was the greatest journey of self-discovery that I'd ever been on. And I think you're kind of getting to that point where you think, oh my God, I'm learning so much about myself. Because do I really want to be in a month-long trade or a trade that's going to potentially be here in July? Do I really want to be that? And I've got to say to you, if this was in negative swap territory, I wouldn't be. because you could well be costing yourself a whole lot of swaps that don't need to be there. But this is positive swap. So really it's the long-term result that we're looking for here. So there's no trade here at the moment on EuroCAD, guys. Don't get me wrong. I don't think there's a trade there. Aussie Kiwi, look, I haven't changed anything here. My stop loss is still at what, 107.40 something, I can't remember. So just updating you on that. This just keeps giving, and I really can't see it stopping, except for retracement. And we're getting very, very close to that point. But I have to keep my stops tight here. On the bigger picture, you know, this is going to here and potentially to here. I can't remember the last time it was at 112, but it was only in 2015. Where did I go? That's right, I remember. I went to New Zealand here. I went to New Zealand around about January of 2015 when we'd just come off a great exchange rate, and I got there and then it went again. Yeah, I remember it well. So yeah, I don't see any reason why this is going to stop anytime soon, which really brings me back to Aussie dollar. Now, Aussie dollar, when I looked at this chart a couple of hours ago, I almost spat the dummy. And the reason is, look at that. Look at that little candle. Now, anybody who knows the way I trade knows that I'm looking for a bounce off the bottom of a range and a higher low, which is a black-bodied bar with a long tail, right? With a low test tail. Guess what that is? That's exactly that. And look what happened. Away we went. Now, I blindsided myself here because I really only had one thing in my mind this morning, and it was to trade dollar CAD and dollar CAD long. But had I had a look at this 4-hour chart, I may well have changed my mind. I think I said this to you guys yesterday in the show, that really what we are looking for here as range traders is a bounce off the weekly pivot and a lower high, a higher low. I'm not in. Not enough time in front of the charts. That's what I'll put that down to. From here, what? Well, the entry's been missed, simple. Could it happen again? Yeah. Come back here, another higher low, or another swing low, or another, what do they call these? Ring lows? Yeah. If that were to happen here, I think you could get in again. But I'm going to leave that one alone and leave you with that. A couple of others that I have been looking at and that was on my watch list this week. Aussie, we spoke about Aussie yen yesterday, right? Lisa asked me a question and she said, what is your opinion of Aussie yen? And I said, well, if you're trading a strong risk on currency versus strong risk off currency, then you need to be thinking long. But you need to also to be thinking, I think we were here in this range. So I think you need to wait for retracement down to this level and then look for an entry. Boy, oh boy, I need to spend more time in front of the charts. We got a beautiful false break of that level, shot back above it, retested it. Hello, to quote Ainsley, I hate that expression, frankly. Away you go again. Dreadfully risky because you're trading into this area here, but eminently tradable. And on a 4-hour chart, it's exactly the same scenario as Aussie dollar. There are opportunities there. You've just got to be in the right place at the right time. As far as now is concerned, look, I still see that on the 4-hour chart and on the daily chart, this is not clear because have we had enough retracement? And the answer that I've got here is maybe not. And there's another bar that you could even consider trading. I'm not, because I'm just so, I don't know, ambivalent to the market at the moment. I'm not clear on anything. I see setups for and against all over the place. And until it's crystal clear to me, I just want to stay out. Euro pounds put in a big sell-off recently in the last couple of hours. which is a kind of a shame because I wanted to get into this short. Again, no real entry for me. Maybe that one there, nice little entry bar, but really you're trading straight into support. So it's too tough for me to do. I can't do that. Kiwi CAD's another one. I wanted to trade this short looking for a pullback. It hasn't really come. It just keeps leaking to the downside. I want to see a meaningful pullback, certainly back to those pivots. Then I'm a seller. Pound yen, I was a seller and looking for a setup off this trade line, really, which is not a trade line. It should live there. So that's still in play, but big move so far today on the pound versus the yen. I'd have to see it come back under here, under the pivots, retest that area, then go short. So I'm going to end where I started, which is pretty much on dollar CAD. And I'm going to make a decision here as to whether I'm prepared to trade this long. Now, you've heard the conversation that Ash and I have had about the dollar and how it's very, very difficult for me to be, or for, no, I'll say for me to be bullish the US dollar in any way, shape or form, especially trading against a risk on currency such as the CAD. So I've got to take that on my equation. It's not the word I'm looking for. Yeah, analysis. I've got to take that into my analysis. But when I look at a chart and something is glaringly obvious to me, I have to trade it. Now, on the daily chart, it's not glaringly obvious right now, apart from the fact that we've got a left shoulder, we've got a double bottom, and we've got a potential higher low. It's not there on the daily chart. But on the 4-hour chart, if the current candle was to close with a tail on the bottom, so a low test bar, and a black body, I see absolutely no harm at all in taking a small stake long above that level, because I think there's huge potential for this to go to the trade line and maybe even beyond it. And if we didn't have the opinion that the dollar can't rally, it's at a pretty strong buy point. There's a lovely tweezer bottom sitting here at a support level. That's kind of where I'm at, guys. It's tough to trade. It really is tough to trade. But some of the best trades in your life come when things don't look rosy and everyone's on the same side of the boat, as Julian says. Pound dollar reached TP. Of course it did. Of course it did, Gary. Yeah, and going okay. Shame me. Look, as I said, this is in test mode, and we learn by things that can happen. And Ash and I have got to update the journal on this. We learn by things that happen day in, day out. And if that breakout trade is okay, comes back to here, just in Shukri Slingshot 2, but it's got to have a decent retracement for Slingshot 2. But if you're trading on a 5-minute chart, maybe that is a decent retracement. Is it too tough for to pick up in a show like this where we're talking all the time? Yes, it is. It's too tough because I just can't be on a 5-minute or a minute chart. But, you know, there's you pull back there and away it went the second time, right? Can't do it. But you guys should be able to take a lot out of something like this because there is a genuine breakout that's happened now. And the reason we want to trade these breakout trades is because there is a genuine breakout. It may not happen the first time, which is what we're trying to perfect, right? And if it happens that the second time is the most effective and most profitable, which is the end of the day what we're looking for. If that's the most profitable entry, then to hell with the first entry, right? Let's try the second entry. What's wrong with that? Nothing. All we need is evidence to back it up. It's very, very easy for us to say right now, well, shit, the second entry was a beauty. Look at that. Why didn't you take that? If you've got data to back it up, take it. Absolutely take it. And Shukri will tell you, that the second entry is far more, I won't say profitable. What I will say, it's far more reliable in terms of getting to A, TP1 and B target. It's just a matter of, are you patient enough to do that? Or let's maybe work on a system where we put, let's say, 0.25% into the first entry. If it gets taken out, we put 0.5% into the second one, or a 1% into the second one. There's all sorts of ways to manipulate that. But we've always known that there will be a different level, more often than not, on pound US dollar after the UK Open. It doesn't happen all the time. It goes into consolidation, of course, depends on what's happening around it. And maybe that's, there's another level of filter that we need to build into this. But, if you understand that pound is generally not at this level the next day, or if it is, it's been somewhere else, then that's exactly what we're trying to perfect, that breakout of the previous range. So there's many, many ways to filter it. Let's keep trying. Guys, where to fly? Sorry, no entries today for me, but I'm keeping my eye on dollar CAD. So if the 4-hour candle closes and this is a low test bar and has got a black body, then I will look to place an order above here. I'll put my stops, probably put my stops below these lows. So I'll give you an indication of what I'm looking for. Looking for an entry at around about, let's call it 127.10, but I'll put my stops around about 126.55. That will be the trade. But the criteria has to be low test bar like it is now and a body like that. If that were to close now exactly as it is, then there's a trade there for me. Would I take TP1 at the weekly pivots? Maybe. There's my risk, 53, say. 21, that's okay. I can deal with that. And the daily pivot sitting there. So I'd go with 127.30. 127.30 as my TP1. If you're in the Telegram group and that does set up, I will absolutely put it in the Telegram group. So keep your eye on it. If you're not in the Telegram group, by the way, guys, get in the Telegram group. I think there's 20-something days left of that being a free service, and you won't have noticed any trades in there today because I haven't seen any. But this one, I'm still looking at that. So it'll be in the Telegram group. Guys, time to go. Thanks for your company. We'll do it all again tomorrow when it's Thursday, and we will have an inaugurated president who hopefully will still be alive. See you tomorrow, guys. Bye-bye for now.